Hello, welcome to today's price action review. So let's go into what I traded today. Okay, this was not the only execution that I made. I'm going to I'm going to toggle the execution so you can see the previous losses that I took before this one win. So I took two trades. There was the first one, it was a loss. The second one was a loss. Then this last one was a win. Okay, I'm going to explain the, you know, what I was looking at while I traded, what I was expecting, what did not play out, what I saw that made me say, okay, let me give it the last third shot and call it a day. So we have all our levels called out. Then to me, this is more important to me. Like the things you see on the chart here, I had to go, way back to annotate this Monday 12 a.m. open. You can see this is 27th of October. And then you can see this is Sunday 6 p.m. open, 26th October. You can see this is Monday low, 27th October. Okay, so those are the areas that are salient to me that I wanted to see price react to. I wanted to understand, what the reactions were trying to point out to me. Okay. And then this is from yesterday. So if you watched yesterday's video, you would see that this was on the chart yesterday. Okay, so I have my today London Q zone high and I have today London Q zone low, which is very clear on the 5 minutes. So okay, so I got those levels from where? 2 a.m. to 5 a.m. And you can see that now this area here, price has not traded into it at the time of the 9:30 price action. Can you see? 9:30. So I wanted to trade it 9:30 price action. That's what I wanted to trade. Somehow, before engaging price, this was what I had in my mind. I wanted to see either this low being engaged or this high being engaged. Obviously, when you look at this looks more like a draw on liquidity than this area, because this looked like this low here, this swing low here that causes projection, all the way here that failed to take this particular high here. It looks to be more stable. It looks like what price is likely not going to draw to until it has engaged this high. Like when you look at it, because this is a area of what's relative equal highs. Okay, but this looks more like a solid swing low. Anyways, but I did not look at it that way. I looked at it based on the new week opening gap where price had already been to. So where price has already been to, when you look at the daily time frame, you would see that this low is actually there. Okay, so I had to trace back where this low came from, like what is it reacting to at the left side of the chart, and that was how I came up with this new week's opening gap. You can see how large it is. When you go to your daily time frame, it's more clear. Okay, so I noticed that price reacted to just the higher quadrant. Okay, just very, can you see all this area now? It's the upper quadrant and this area here is the lower quadrant. But price reacted to the top area of the new week opening, so I'm like, okay, since it's fairly reacted, it didn't get to the what's it called now, to the midpoint. So there's a possibility that since, okay, this is what I was thinking of, since price, came to this area from the swing low, took price all the way up, failed to engage this um London Q zone high, and then drop lower. It's possibly going to be that price wants to, come and engage this area here. That's to this London Q zone low, and then trade into the new week opening gap. So that was like, because it's 9:30. Okay, 9:30, you see crazy price action. So price can move 200, 300, 400 pips. So that was like my projection. I was like, okay, do your thing. And that was why I called out my Fibonacci 2. So my Fibonacci 2 is from this level here to this level. Why is it looking so small? Okay, yeah, I think I had to minimize it so I don't have like a lot of lines on my chart. Anyway, but if I should increase it, this is what it's going to look like. Let me quickly do that. Yeah, can you see this? So that's like my daily range, and then you can see this is the 0.5% level. And like I love to do, I had to look for a 15-minute fair value gap on the 15-minute time frame. Okay, and this is the fair value gap here, and you can see that this is also what we call a bearish order block. This here is a bearish order block. All right, so, and you can see we have the 15-minute time frame, the hey Chineke, the fair value gap from the 15-minute time frame here. Okay, so yeah, I want to explain the first loss that I took, then I'll go to the second one and I'll explain the last win. I'll show you what it looks like on the 15-minute time frame now. All right, so you can see this is the 15-minute time frame. Yeah, can you see? Can you see the fair value gap here? Can you see the other block here? All right, so back to the 5-minute time frame. Yeah, I'm going to go to one because I did not engage price on the 5. I engaged price at the 1, and this was what I was looking at. Okay, so all right, so I was here on the chart, I was looking at this level here. So to me, I was like, this looks nice. Probably price would break, you know. So this was what I wanted to see. Okay, okay, so I wanted to see price break into, see now it's already 9:30, almost 9:30 at the time. So I was watching this particular candle form, and I had this level here. I was like, okay, so this is what would happen for me to open a trade, right? So for me to open a position, price is already dangling around the Monday 12 a.m. open. So maybe at the time now, maybe this would be, will act as resistance, a resistance that would resist price from going higher. So that's what I was looking at. So I had this level called that. Then immediately it was 9:30. This particular candle dropped slower. Can you see? It was a massive, displacement candle. And I was expecting it to close, lower, not close at the same level of this particular up close candle. But then it didn't do that. But even at that, I was like, okay, no problem. Since it's still almost on the same plane, let me make an entry. So I opened immediately this next candle. Though I did not actually like open a live execution, but I just placed the sell to. Let me show you here. Let me show you. So okay, so I placed it here. I'm going to tap on it, but not yet. I want to explain something. So can you see this line, this very dark shaded line here? This is a bearish order block from way behind, way behind, somewhere around the 27th October price action. So it's from way behind. And so I had that level there as my stop loss. So to me, I was like, I don't want to see price come up to that area there. Okay. So I was a bit right, but then these things can be very, very crazy sometimes. So that's why I just called at that level there. And because I already know it's a bearish order block, right? So now, but then because I don't want price to move without me, which is not a good thing. You're not supposed to chase price, okay? But it's still at an area where I would like to sell, because this is a 15-minute time for fair value gap above the 0.5% level. Okay, so selling anywhere here is meaningful. Selling anywhere here is meaningful to me. So I just brought out the two, and I was like, okay. So yeah, I was already in at 9:30 exactly, because I had to set, hoping that it would take this slow, drop lower, and just drop lower, all the way to today's London kill zone low. That's what I was expecting, all the way. And then where did I have my stop loss? At my stop loss at this same level, like this same level here. Okay. So, but now it was not I didn't engage price again. I don't know why I keep repeating it. Anyways, so while I was still watching, price doing his thing, oh, from nowhere, this candle did not close down there. Oh. It went and closed up there, and then the next candle popped. I was like, okay, it's not going to come to that area. It's not going to come to that area. Oh, immediately it came here and took what buy side liquidity. This short term high here, price engaged, so I was automatically out. Okay, so I had to just abort. That was what happened. So and then the very crazy thing that now happened next was after I got to that area, what did he do next? He came towards my direction. Yo, this market, hi. so so he came towards my direction, but then I was not in it, so I just had to watch it play. So I'm going to take this out. All right. So when this happened, it was already 9:35 here, and 9:40. I tend to like expect a change in in price delivery most times. Like probably you enter the trade at 9:30, at 9:40, 9:45, you should be looking to exit, especially if price has moved in the direction of your take profit significantly enough. Now imagine I had my take. Let me bring this back here. Okay, so now this is the area where I had my take profits here. That's if the price should have moved in my direction here, and you can see how significantly price has moved to this area at 9:35. So I was hoping that at 9 40 candle, 9:40, 9:45 candle, what will happen? Price will just trade, into the today's London key zone low. That's what I was expecting. Since it was already closed, and this was price coming back to react towards to this same new week opening gap. Remember that it has reacted to it previously, here. Okay, so when I saw a return to that level there, I was like, okay, so what would just happen there is price going lower to the today's London kill zone. So I said, okay, well, let me just see how many pips it will give to me if I should trade from this area here, because at the time this looked like a bearish order block. Okay, so like if I should enter here now to this area, how many pips the price? And I'm like, oh, that's cool, about 40 pips, good business. How many pips will I risk? I'm like, okay, let me see. 20 for 40, good one. Okay, good one. So I'm like, oh, what should I do now? Let me open a position now. That's what I did. So I'm going to toggle on this trade, toggle on this executions. Let me see, toggle it on, toggle it on, toggle it on. Max. Okay, yep. All right, so I was like, okay, oh, let's take this out now. So what happened was that I sold at this particular. So after this particular candle, did its thing, and then went back to this area. So it was actually an up close candle when it opened. So it was an up close candle. It went high and then dropped lower and closed here. So I was like, oh, that is a good sign to sell, because what did he do? There's a fair value gap here, and price has traded into the midpoint of the fair value gap. Me, I was not even now. I'm not even looking at Dini range. Maybe me selling. Me, I'm not even looking at me selling at above 0.5%, because I'm like, it's almost the end of the price run, so let me just get what is left of it. Let me just take the leftovers, which I'm now saying that it was not a good thing to do, because obviously I got stopped out. So that's how I now know. Anyways, okay, so this particular can, let me see if I can toggle out the label, because I can be sure of the exact price where I sold at. I didn't want to toggle it all at the same time so that it doesn't have a lot of max. Anyways, okay, this is what I was trying to avoid. So I sold at what? 25 25,572. Where is that? 25,578, pardon me. Yeah. So I sold this particular candle, okay, while it was going up somewhere, yeah, somewhere there at the Monday's low. Okay. So like it is just very close to this particular supposed order block, which now, turned out to fail. So I was like, there's no way price is going to come to this top, to the top of this place. There's no way. That's what me I was telling myself. Oh, there's no way it's going to come to this area, to this particular candle's high. So let me just raise my stop loss to this place. So that was what I did. So that would look, this is what it looks like short still. That would look like, selling here, having stop loss. Having CP here about 40 pips, right? But now it's not going to be 40 pips now. But then this is what I had in mind. Let me see. Taking it to a place whereby, why is it no highlights in Beacon? Why are you wasting my time, huh? Okay. Oh, Chineke. You know what? I'm going to leave this. I'm going to leave that. I'm going to leave that. So that's just what it is. I opened the position here, and then it took me out there. Can you see 606? I guess 607 took me out also, somewhere around there. So that was it. I was like, oh, I don't like that. I don't like that. I don't like that. And so I was like, okay, let me just, chill and see what price is going to do next. Let me see if it's going to, if I'll be able to catch an opportunity to make another entry. Okay. Okay. So now what's next? What happened next? So I was watching and price, did its thing. When this particular candle was coming down, I was like, okay, looks good. Now, I would say I'm guilty of chasing price because there was no reason why I should be entering, I should be opening another position at the time I did. There was no reason for that. It was, I don't know. It was just that I was restless. So restlessness made me oh god, like why will I take a loss? Why? Eh? Don't try that at home. Don't do that on your chat and don't do that with a live account, okay? Anyways, I'm going to bring because I don't know exactly where that is. The second trade I took, I can't remember the level, but I'll just turn this on so I can see. I'll take out the labels. Okay. So okay, so now this particular candle here, let me see. Okay, yeah. So what happened next was I was like, let me go to 5 minute time because that was going to give me more context. Because I'm trying to now remember the levels and stuff. I don't want this video to be too long. Okay. Okay, now I don't know if I've said it because I've now forgotten. This is a very short vlog from the past. Okay, that's a very short vlog, and I was like, so what is now going to happen is that since price is already, price is already moving higher, okay, and then this is the fair value gap on the from the 15-minute time frame. I still had the sell narrative going on. I've not changed. Okay, I still, but me, I felt like, me selling here would be me selling what at premium. All right, so that's why I still had, excuse me. Okay, so I sold somewhere here, I guess. Yeah, I sold here. Can you see? Somewhere here. And then I had my stop loss at this particular candle, somewhere around this area here. So I sold, hoping that price was going to fill me in at this there's a little gap there. And I watched it go all the way, and then it took me out. Crazy, right? Yo, let me bring back the label so that I can be sure. I want to be sure that I'm not missing out anything. I want to lay it all out, okay? Okay, so that's this candy, yeah. Okay, so this candy, that is 25, what now? 25628, 25628, 25628, 25628. Yeah, exactly. So I sold here. I had my stop loss where 25. I don't know. It seems I'm not wasting like a lot of time trying to, you know, fish out the levels. Well, the point is that I sold somewhere here and I had my stop loss here because I was hoping there's no way price is going to get to this particular candle's what high, this one here. So that's how I had my stop loss. And what happened? I got stopped out again, again. Imagine I was even increasing lot size as I was going. Initially it was 0.1. Then I went on to 0.5. Was I trying to recover the loss that I made initially? Something like that. Anyways, so that was it. So now let's go to the main thing, the most important part, which is the win. Oh my. Okay, so having taken all that loss now, I had to, vibrate, come back. Let's take a look. Let's understand what exactly is going on here. So I waited for this particular candle to form, that was the particular candle that took me out, obviously. And then the next one did its thing. It was a bit confusing. I was not sure what it wanted to do. I was not sure if it wanted to come down and, give a massive displacement candle and come all the way to take to this London Q zone low. I wasn't sure. So I had to just pause and watch what price was doing. When I went to the 1 hour time frame, it was giving me a bullish narrative, like price wanted to go for higher price. So I said to say, okay, let me see reasons. Let me see what price is going to do now that would make me, believe that it really wants to go for higher prices. That was what I had in mind. Let me see. So I waited and I said, if that is going to happen, then this area here that is a bearish order block from the past, I want to see a rebalance happen here. And that was exactly what happened. You can see initially price rejected that level. And then this next candidate was traded, defiled the level. Defiled it, has been defiled already. And then the next candle, what happened? It traded into what? This area here, this same fair value gap from the 15-minute time frame, somewhat close to 0.5% level. Okay, and then when did it close? It's what it went. Imagine this was a it was a down close candle initially, and then went back all the way up to now form an up close candle. I was like, that is it. So when I looked at this area here, this to me now is a bullish order block. Okay, so this is a change in a state of delivery that was already ongoing. So normally, like, if you want to be very precise, sometimes you would want to allow C price, trade past that area and then return to it. Then probably you just sell at the week or at the body day if price would return to that area. But the thing was that it was almost 950. Can you see this was 945 candle? And then the next candle will be what? 950. I know since it's 950, the algorithm is going to kick in, and most times it will be fast, especially with the fact that it has gotten to this area here. And then what do we have above? We have the today's London Q zone high above. Okay, so I'm going to take out some things on the chart because it's now looking a bit crowded and I don't want that. What should I reduce? What should I change? I'm going to take out some of these things. Okay, because so the main, so I'm going to take this out now. Shav explained it, you understood. This was what? A bearish order block from the past, and I watched this rebalance from. The rebalance I mean here is it initially rejected that level, then price came back to it, traded past it, and then returned to that level here, even leaving a wick at the 15 minutes, the fair value gap from the 15-minute time frame, and went back up and closed as an up close candle. It closed as an up close candle around this area there. So I liked that. I liked that very, very much. So what did I do next? I said, okay, oh, me, I'm not going to wait for anything. Like once it's since it's 9:50 and price tends to move fast, since it's the algorithm doing its thing, I'm going to open Ozubo. Like once it's 9:50, I'm clicking buy. Where will I not have my stop loss? So I was like, I would open my position here and then have my what? My stop loss here. So I was using this particular candle. Can you see this down close candle? 1, 2, 3. So I'm going to use the wick of the down close candle, and that was where I had it. I think I just, yeah, that's where I had it. Can you see? I think I brought it lower to this particular candle, but this was the candle I was looking at. All right, so I was like, okay, now price is going to trade. Since price is bullish, it's going to trade into today's London Q zone high. Yeah. So which other place is price now likely to draw into going forward? Okay, and that would be what? This fair value gap here. 1, 2, 3. This fair value gap here on the 15-minute time frame. I would love to want to see price get to this here, because this is what? A bearish order block. I would like to want to see price get to that level here, there, but I don't want. Price can do all of that. Take me out at this high. That's what I said. That's what I had in mind as I was trading, because I didn't want to come and start dancing around, maybe a consolidation and stuff. They just take me out already. Since it was almost um since it was almost 10. Okay, so I was trading the 9:50 to 10 9:50 to what? To 10 a.m. macro. Okay, I'm back. So where did I stop? Okay, so I was like, I know you want to get there. That is where you're headed. But just take me out at this high here. This third candle that formed the fair value gap, take me out at that high. And that was exactly what happened. Okay. It feels good, right? Yeah, it does. It does actually feels good. Oh my, oh my, oh my. Let's see. Let's just toggle that on one more time. Can you see? So this time around, I said, let's go all in. Let's go all in. Let's open one lot size. This is the devil trader. Don't try this with your prop account. Don't try this with your live account unless you have calculated your risk. Okay. So that was what happened here. Entry was made here and exit was made there. And that was a good trade. A good one. Let me go to 1 minute time so you see how nice it was. How nice it looks. Can you see that? Can you see that? Are you able to see that? No, it's so good. It is so good. Anyways, that is all. Let's see what news we had today. There was no high impact news. There was news at 6:35 a.m. and there'll be news at 4:30 p.m. So there's no serious news there today. And yeah, that is exactly what happened. So now what happened next? I'm going to take this out now because I didn't really consider it anymore. Once it was time for the algorithm to do its thing, I did not consider it all. But I'll just looking at now is where can price get to? Can you give me up to 50 pips? Okay, so that I can enter Supposable. And that was exactly what happened here. Because when I checked, I'm like, okay, it's 950. This was 9:40. I was looking at it on the 5 minute time frame, okay? Was like, if I should make my entry here and then I move all the way to the lower quadrant of this fair value gap, and what am I risking? What am I making? So it made sense. Imagine you're risking 27 and you're making 74. So I'm like, cool, sign me in already, because that looked more like a draw on liquidity for me. So I did not use the daily range. So you see, there can be, a little tweak here and there, but experience will teach you better. When you spend time in the markets, you know when sometimes don't go against your rules though. But then, I just did my thing again, not an actual account. I don't even know if this was like a live. If, let's say if I was trading like my proper account, I don't think I would have taken the third trade. I'm likely to take the third trade, but if it turned out to be a loss, then there's no trade for the day. Oh, there's no trade for the day, and I would not be using as much lot size. There's no way I was taking losses and then I'll be increasing my lot size. I would not do that, because initially it was 0.1, then 0.5, then one lot size. No, I would not do that. I would use the same lot size but not size up. Okay, like I'll use the same lot size I use here, maybe like 0.5, but not increase it to 1, even when I'm sure of price going my direction. That's just my own way of managing my risk. So yours could be different. So having said that, can you see the way I really like to concentrate on the open, close, high and low of price? It tells me like a lot. I'm able to understand, how candlesticks are reacting at those high lows and stuff, and make better decisions. So you want to know your drawing liquidity, you want to have a dealing range, you want to buy, either you're buying at a discount or you're selling at a premium, and then have an area where you know that price is definitely going to reach to. In my case, looking at this 5% level, let's say 5% level at this 5 minute time frame, I knew it was definitely going to trade up to this area, but I was not going to wait for that. Just take me out here at this high. Okay, so, and that was how it played, very, very beautifully. Very, 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 very beautifully. And yeah, that's all we have for today. It's already 11, and you know, we had executions and we learned, there's lesson learned from the losses we took and the win. Thank you for watching. That'll be all for now. Bye bye.